When Wall Street whispers, it's never random. It's not noise. It's choreography. And right now, that choreography is turning its focus toward Ripple Labs and the quiet resurgence of XRP. Imagine the marble boardrooms of the world's largest asset managers. The ones that don't chase hype, they design it. These aren't traders watching candlestick patterns or chasing influencer calls. These are portfolio architects, the ones who ask the question that actually shapes markets. Which system will the next financial world run on? And in those rooms, Ripple's name keeps surfacing. Not as a crypto brand, as infrastructure. Over the last 48 hours, a string of institutional disclosures revealed something new. Heavyweight funds, the kind that usually avoid crypto headlines, have quietly added Ripple-connected exposure to their portfolios. Not through speculative altcoin baskets, but through structured positions linked to Ripple's ecosystem, custody, settlement, and liquidity rails. That's not a retail signal. That's institutional positioning. Slow, deliberate, and strategic. Because when Wall Street moves, it doesn't buy hype, it buys systems. And that's exactly what Ripple has built. Over the past year, Ripple has quietly assembled a financial stack that feels familiar to institutions. Custody solutions, treasury integration, liquidity management, and regulatory-grade compliance layers. They're not selling speculation anymore. They're selling infrastructure that fits inside the same workflows banks and asset managers already use. For the first time, Ripple's ecosystem looks less like a blockchain startup and more like a digital version of Swift. Programmable, instant, and regulation-aware. And this is where the pivot happens for XRP. Because once institutions begin valuing the network, not just the token, XRP changes its category entirely. It stops being treated as a speculative asset and starts operating as a component, a digital bridge between fiat systems and tokenized liquidity. We've seen this before in finance. When infrastructure becomes indispensable, its underlying instruments rise quietly. Not from retail buying pressure, but from necessity. Think of oil in the 20th century. Think of data bandwidth in the 21st. XRP is moving into that same conceptual territory. A settlement lubricant. And the timing couldn't be more strategic. The ETF window, what everyone calls the next major domino, isn't really about the ETF itself. It's about access. Institutions don't want exposure to price volatility. They want exposure to network functionality. That's why several XRP ETF filings are quietly being framed not as crypto funds, but as bridge asset exposure products. The language matters, because it defines category. And once XRP sits in a category next to infrastructure or liquidity, it enters a different valuation model entirely. Wall Street doesn't need XRP to moon. It just needs XRP to work. That's where this becomes dangerous for anyone still thinking in terms of price predictions instead of system adoption. Because when the capital base shifts from speculation to settlement, the retail crowd is always late. The earliest signs are already visible. Filings showing Ripple-related entities appearing in institutional reports, OTC desks listing XRP as part of cross-border liquidity offerings, and on-chain data showing accumulation patterns not from traders, but from structured wallets tied to custodians. To the untrained eye, that looks like stagnation. To an analyst, it's repositioning. This is what control looks like before the reveal. And then there's the silence, perhaps the biggest tell of all. When you stop hearing constant noise about price, it's not because interest has died. It's because the narrative is being replaced by contracts. Retail speculates. Institutions implement. The smarter funds aren't waiting for XRP to hit $7 or $10. They're positioning for a world where it doesn't matter, where XRP simply functions as the digital lubricant inside tokenized markets. Because in that scenario, value compounds through usage, not hype. So what comes next? First, look for treasury statements that include XRP exposure, even in small notations. That's confirmation that institutional entities aren't just testing the pipes, they are connecting them. Second, monitor OTC volumes. When liquidity starts moving off exchanges and into private custody, it means the infrastructure phase is underway. Third, expect silence to return. The louder the noise in retail, the earlier you are in speculation. The quieter the institutional buildup, the closer you are to implementation. And implementation is what defines a new era. This is what makes Ripple's position so unusual. For years, it was the target of lawsuits, skepticism, and dismissal from traditional finance. Yet quietly, it built bridges. Not metaphors, but literal payment corridors between institutions that once refused to touch crypto. Now those same institutions are circling back, not because they suddenly believe in XRP, but because the architecture they need is already running on Ripple's rails. It's poetic. The same system that regulators tried to corner is now being studied by the same regulators as a compliance-ready model. And that's why this isn't a hype cycle. It's an evolution cycle. Wall Street's bet isn't that XRP will explode in price overnight. Their bet is that XRP will exist everywhere, quietly embedded in the financial systems they already control. That's how institutional adoption looks. Invisible until it's irreversible. So, while social feeds chase green candles, the real story is happening behind closed doors. The story where contracts are signed, custody rules are written, and liquidity corridors are being programmed into the same rails that settle trillions in fiat every day. It's the difference between noise and control. Because when Wall Street moves, it never announces it. It disguises motion as stillness. And if Ripple's ecosystem really is being integrated into that motion, into the machinery of modern finance, then XRP isn't just another asset in the portfolio. It's the access key. And when you own the key, you don't need to chase the door. So ask yourself, are you watching the charts or watching the system? Because by the time retail realizes what's really happening, the system will already be live. Wall Street isn't betting on Ripple for hype. They're betting on it for control.